place I've ever been.
Hello guys, welcome back to another lovely trading video. In this one we're going to be doing our strategy video, so you can see the exact strategy I trade near enough every day in the market, and have adjusted since the previous episode video I made. I think might have been April or so, but markets have kind of slowed down since then, so some adjustments to the strategy have been made. So we will go over Friday's examples on the trade, so you can see kind of from live examples of what we did. And I also did the video on Friday if you want to check that out, or the upload before this, which was the day trading recap for that day, and you can see where we took the trades and all that. But as previous, we still use the same thing, the standard deviation channels. So to add these on, you just go studies, edit studies, search standard dev, standard dev channel, and you just add in 1, 1.5, 2, 2.5, 3, 3.5 and 4, and you want to probably change the look of the upper and lower. The middle you can leave default, but if you want to see exactly how to do that in detail, I will link that video as a pinned comment, because there's no point me going over that again because it takes about 5 minutes or so. Since the previous video as well, I believe we added in the 4th deviation. Don't think we had that before. This is just for those runners that move that bit more, and we can use it as the next line of resistance, or if we're going long off the 3rd deviation, we have some price targets. So on ALEC, we did trade this on the Friday, and what we would do is go onto the 4-hour and the daily and plot our support and resistance lines. So to do that, I mean, it's pretty easy. You literally just go to your deviation line, change the drawing thing down here to like the dollar line, which is your resistance line, and then you can just get it by double clicking, and it makes it nice and easy. I'm not going to replot these because this is where they were during the live market, so we'll do it on some other examples. You can see other, but I'll leave it like this while we go over the example, because this is where the deviations were in the live market. You can see on the daily they don't change, on the 4-hour they adjust every 4 hours. So as you can see on ALEC, it opened up, it touched this deviation here. Obviously I personally don't trade pre-market, so didn't trade any of that. Pulled back to our next deviation and bounced straight off that. You can see it retested this deviation and broke through. So what I ended up doing is going short on the next deviation, and that's exactly what we did. We ended up making, I believe this trade, it was something like $400 in 25 seconds. It was a pretty crazy trade. And yeah, we had our price target of, I believe, 34.90, and we had our stop loss of 36.10. So we'll kind of go over this trade and why I placed profit targets and stop losses. So for the stop loss, as I said, 36.10. Reason for this is we're kind of entering at that $0.25 resistance as well as the deviation, so we want to give it some room to move, but not so much that if it breaks through that level, it will probably carry on. And to me, if it breaks through the $36 whole dollar, it's most likely going to carry on its uptrend. So I have my stop at 36.10, just so it allows it a bit of breakage room in case it comes up to like 36.05, and then gets a lot of selling pressure. So on this trade, yeah, I was risking 40 cents. I think we entered at 35.70, so we are risking 40 cents. And we had a profit target, or first profit target of 34.90. So we had around a 2-to-1 risk ratio on that trade, and what you would usually do is exit maybe a half or 2/3 of your position at that first profit target, which in this case was 34.90. The reason being, that's where your deviation is, so there's a high likelihood that it could bounce off this level and continue its uptrend. So lock in some profits here, and then ideally I would lock in the rest of the profits coming down to VWAP. In this case, as the trade worked out in 25 seconds, I didn't have time to adjust my profit targets. And in this case that was a good call, because we would have ended up getting stopped out on the rest of our shares at break even, because that's where you want to adjust your trade to. And we'll go over TATT, and then we'll kind of go over some examples that we didn't trade. So this one's good because this was a long. So obviously on that one we were short, This is what wasn't in the strategy before. I mean, that ALEC trade where we were shorting stocks, that's our previous strategy. That's what we always did. What we've now added is long trades. So you can see on TAT, we went long here, did end up getting stopped out here. If you watch the recap, you'll notice that's because we were no longer watching the stock. I went out, it was 11:40, I'm no longer at the computer at that time, so these were just automated orders of a profit target of 880, I believe. We just didn't get a fill, and obviously if you're watching it live, you would lock in some profits at that deviation and some on the way up, so it should be a winning trade. It's just obviously we weren't watching it live. So the reason for this long, if you go over to the 4 hour and the daily, we'll bring up these ones just because they're bigger and easier to see than on the charts. You can see we're looking to go long at 773, 857, 857 would have been, I think, the third deviation on the daily, and that 840 probably was the third deviation on the 4 hour. So you basically just come over, plot your resistance lines like that. In this case they're very close together, and these can be good long entries when the stock comes back, as you'll usually get bounces off those levels. So yeah, you can see we went long here, and yeah, ideally have profit targets of, again, the closest deviation, in this case 57, and then probably VWAP. And again, on a stop on this, I believe I had a stop of 820. Yeah, that's where we got stopped out here. Reason for that 820 stop is obviously it's an $8 stock. I don't want to have a stop below $7 because we shouldn't be giving it a 5% move. I mean, if it doesn't work in like a 2-3% pullback, it's probably not going to work. So I have my stop at 820 because then you get that $0.25 resistance and it will most likely get a bounce. As you can see here, you bounced off that $0.25. So that's what you're really looking for. Quarter, whole and $half are good key levels to place your stops just below or above those levels. Above if you're shorting and below if you're long. But yeah, so basically that's what we add in, going long on these areas and playing bounce. The only difference is though, when you're looking to go long and the same on ALEC, if you're looking to go short, you want there to be room from the 9. Like if it's just stepping up, it's not a good idea to short it or go long. So like here, you can see it came down close to that level and it allowed the 9 EMA to catch up, and so by the time it actually hit the deviation, it was very close to the 9 EMA. In these cases, you don't want to go long or short, even if it's the first time it's hitting its level, because it's just not as likely to get that sharp reaction off it. So that's kind of more your price action. Obviously you can't just rely on an indicator, it's never going to work. You always have to use some common sense, some trading knowledge to help you along the lines, and for me that's literally just looking at the candles. If they're really close to the 9 EMA, I don't touch it, and that's why you use the 1 minute chart to look at the entry. But you can see on my short, let's see, 9 EMA was here, entry was this level here. It is a 4% extension, so to me, if you're hitting a key level, you're 4% extended, you're likely going to pull back. So that's basically the main things you want to look at. So now we'll use an example that we didn't trade. So if we go over to BITF, okay, it doesn't look like it moved, we'll use the gap scanner. Let's see what Wave did. Wave pulled back, so okay, no, remember, I think I said that earlier, if it doesn't have a year of data, don't trade it. ALEC we already did. Let's see what's happening on BLIN. Okay, BILN. Let's see if we can do any analysis on this. Kind of. So obviously these levels move, so they're not as accurate looking at them now, that's the only thing, but we can use them as examples. So first time it hit into the deviation, you can see it did pull back. Not great on this one, probably would have been a loss or a break even. Didn't work in the way we wanted it to, but again, that's pre-market, wouldn't have touched it. Second one, this one would have worked again. So you entered at 640, your stop is probably looking to be a 660 because you want that whole dollar resistance and you need to give it a bit of room. So 660, 661 would have been a good stop. If you had 660, probably would have got stopped out. 661, you would have been fine. And then you have that profit target of the below deviation. And VWAP, so here you would have locked in whatever's first. In this case VWAP was first, you lock in 2/3 of your position or half of your position here, and probably look to lock in the rest at the deviation, or at least that's how I trade it. And then yeah, you won't touch these again. If the deviation's been touched, you probably don't want to trade it again because it's just not as likely to work. Obviously you can play the long bounce, so like through here it broke through, pulled back, did bounce off that level. Personally, I would not have traded that because it just still hasn't moved far enough. The only time I would trade it off the bounce is if it's kind of done this move where, you know, it's gone $1 or $2 above the deviation, and then if it pulls back from that, then it's showing you a proper good pullback and a good bounce. One thing I did forget to actually mention, but I'm remembering now, is a VWAP is important for your entries. So if we go over to ALC, you will see when we entered it's above the VWAP. You want this if you're shorting, because VWAP you can consider the mean of the trading day. You want it at some point, the stock will most likely return to VWAP. So you want to be, if you're shorting, selling it above VWAP. If you're buying it below. You'll see on TATT our entry was below VWAP. You always want to be, if you're going long, below VWAP. If you're shorting, above. We'll see if there's one more example we can go over. If the chart will load, or if we can get a stock that's actually moved on the day. MRIN, okay. Yeah, these are the ones as well you probably won't be able to touch because they're just so far above the deviation that they're just not realistic to trade and are not respecting it as well. Staff is at, okay, we'll try and see if this one did anything. So you got a deviation at 6, you got one at 703, you got one at 50, 57, near enough. So those are key levels. Now, if we come back, you can see pre-market pulls back to this level. If you're entering at that 670, you have a stop below 450, would have been fine. You have a profit target of your next deviation and some at VWAP. Again, perfectly there. Again, I don't trade pre-market, but if you do, they still work. First time touching this deviation, I can't see further back. I know, so it did touch it pre-market. Don't know if it's considering that as a touch. If not, this is the first time it's touching that deviation. A good short location. You're entering at that whole $6 level, so you have a stop. Probably you can either pick a 610 for a tight stop or a 630 for an extended stop. Either is fine. Maybe if you're looking to lock in profit at that 580, you want that 10 cents or a 610 stop, so you're allowing a 2-to-1 risk ratio. But if you did do that, either way, doesn't matter where you had your stop, you would have been fine. It pulled back to that deviation again, so lock in half at your VWAP or 2/3 at your VWAP, lock in the rest at that deviation, you would have been fully out. Great trade. Went long, and again, may have looked for a bounce play off this. I personally didn't, so there was probably a reason I didn't. But these are areas you can look at your bounce plays. In this case, obviously it did fail. Actually, depending where you bought it, if you waited for this breakout, which wasn't really a breakout, it would have worked. However, if you waited for this move and waited for that pullback long, most likely would have failed. But you would have noticed, quickly think to yourself now why you would not have entered. We're above VWAP. As you can see, VWAP here, this purplish pink line. We're above it, makes no sense to go long because most likely it's going to retrace to the VWAP. So the only way we go long on this stock is if it's below VWAP and hitting into a deviation. So again, long there, you can go long here. This one you may have got stopped out. Oh no, you wouldn't. Look, 670 enter, you have your stop below that $0.50. So, you know, a 445 or so, a 440 stop, you would have been fine. I mean, you probably would have locked in some profits here because VWAP and the next deviation is so far away and markets were closing. But I mean, you could have swung it. It would have been a alright swing, but I mean, it's up to your preference. So I hope that kind of explains the strategy on how we use it to go both long and short. Obviously, if we're trying to go long, you don't. So let's say here comes back, you may have gone long on this move, maybe not. This one worked well. You could have gone long, but you may not have. Probably wouldn't have gone long on this move just because it's kind of already done that move today. you don't really want to trade that same move twice in one day, even on the bounces. So that's just a thing to keep an eye on. Maybe only trade it if it's the first time doing it on the day. So first time shorting the deviation move, so like here, and the first time it does a full retrace back to that deviation, as such as here. So yeah, hope that makes sense. If you've got any questions, let me know. I'll answer any in the comments. And if you kind of want more help or anything, you can just check out day trading recaps. I go show you how I did each trade on the day, or just join the Discord, link is in the description. I'm in there when markets are open, at least for the first 2 hours usually of every trading day, chatting to the people in there. And so if you've got any questions during market open, I'll be happy to answer any. So I hope you enjoyed the video. Hopefully this strategy helps you. Hopefully you understood where I'm placing the stops, when I'm looking for entries, remembering that you're only going long if it's below VWAP, only going short if it's above VWAP, and that the entry is extended from the 9 EMA. So that's it for the video. Hope to see you in the next one, and peace.
I lost my